एक बार सर आप चेक कर लीजिए, हो गई स्ट्रीम स्टार्ट। चलिए सर, एक बार आप वॉल्यूम वो क्लियर कर दीजिए कि सही आ रहा है या नहीं, और मुझे बता दीजिए। Good evening, students. Good evening, students. Hopefully, you all are fine. Me, CS Dilip Chenani, again with you. As in previous section, we all have discussed about the lots of type of MCQ questions. We discuss about the lots of type of MCQ questions regarding the your exam. So today we are going to conduct our remaining part of MCQ questions. Just wait for a minute. We are going to start. In last meeting, we have completed around till 35 till 37 question. Today, from today, we are going to start from the 38th question. Just look at what is the question. In a product mix decision, which is the most important factor to consider in order to try to maximize the profit? This question is related with the marginal costing. This question is related with the marginal costing. In marginal costing, we have to compare one product to other product, which product is more profitable. And if we are going to compute, we are taking any type of decisions regarding the product mix. For this purpose, we have to calculate contribution. We have to calculate contribution. So how the contribution is calculated? Contribution is calculated sales minus variable cost, then it is regarded as contribution. Okay, for any type of product decision, we have to calculate contribution per unit on the basis of particular factor, which are the limited factor we have to use. So in this question, there is an option contribution per unit of a scarce resources. So it is a concern which is related to the limited factor. So if we calculate any type of product mix, we have to calculate contribution per unit of a particular resource. Okay. Moving to the next slide, next question. Which of following costs incurred by a commercial airline can be classified as variable? Out of which, what is the variable cost which is incurred by the commercial airline? Okay. First, interest cost on leasing of aircraft. No, because it is a fixed charge. Pilot salary, it is again a very fixed charge, because pilot take the amount not as per the services. He take a per month salary. Okay. Now, depreciation on aircraft, it is again a fixed expenditure. So none of the above is the fixed expenditure in this. Moving to the next. Just a second. Okay, next question is there. The basic decision rule of acceptance of special contract is, if we want to accept any type of special contract, then how the decision rule applicable? If when we, it is a concern which is related to the marginal costing, which is related with the marginal costing. In a marginal costing, everything is acceptable when contribution is higher than, the fixed cost. Okay, so in case of special contract, when the contribution, accept the special contract if it produce a positive contribution to the fixed cost, means contribution is higher than in comparison of fixed cost. Moving to the next question. If budgets are prepared of a business concern for a certain period, taking each and every function separately, such budget are called. When the budget is classified, in different function, for this purpose we have to prepare a budget. Which is known as the functional budget on the behalf of functions. Moving to the next question. Which of following is not an example of functional budget? In functional budget, we prepare according to the function. Okay, but production budget, no, it is not a part of functional budget. Cost of production, no. Material budget, no. So the right answer is none of the above. Okay. Which of the following is an essential of a budget? Means, what are the main characteristics of budget? When we preparing any type of budget, then what are the essential things we have to need? So, first of all, budget must be for future period. It must be for fixed time period, for 1 year, for 2 year, for 2 months or 3 months. Okay, and proper statement must be prepared either quantity wise or quality wise. Fourth, quality. These things must be in a budget when we are preparing any type of budget. Okay, it is prepared for a definite future period. Yes, it is a statement prepared prior to a defined period of a time. Right. This budget is monetary and quantitative as well as qualitative. Yes. So the right answer is all of the above. Okay. When preparing a production budget, the quantity to be produced equals to how many quantity we have produced. So simple, from the sales, deduct opening stock, of inventory less closing stock of inventory. Then we will get how many goods produce in this month, in this year. So the right answer is B. In comparing a fixed budget with a flexible budget, what is the reason and the difference between the profit figure in two budget? We are comparing fixed budget with the flexible budget. Fixed budget always fixed, there is no changes, but flexible budget change according the level of activity. So the basic difference between these two, different levels of activity, so the right answer is A, different level of activity. Next, When budget allowances are set without the involvement of budget owner, the budgeting process can be described as what the mean of the question. Just listen properly and understand. When budget of allowances are set without the involvement of budget owner, the budgeting process can be described. When any type of allowances you are setting, any type of allowance are set without the involvement of budget owner, then it is a top down budgeting approach. Okay. Next, for which of following would zero based budgeting the most suitable? Zero based budgeting is mainly, most importantly, always suitable for government organization. Government organization always follow the zero based budgeting. Okay, moving to the next question. Which among the below is the reason behind the material price variance? Why the material price variance arises? Either there is change in the actual price, either there is change in the purchase order, either you have pay excess any type of taxes and all things. Okay, so first point, change in the basic purchase price of the material, yes. Uneconomical size of purchase order, when we are purchasing more than the standard, then there is a variance arises between the price and actual level. Then payment of excess or less freight, right? If we are paying high, then again MPV arises. If we are paying less freight, then we have to pay less amount. So there is a difference between the standard price and actual price. That's why these all of the above. Contribution margin is equal to sales minus fixed cost minus profit. No. What is the formula of contribution? Just look it. From the sales, we have to deduct variable cost, then we will get contribution. Then we have to deduct fixed cost, we will get profit. So two formulas: sales minus variable cost or fixed cost plus profit. But if there is a loss, then fixed cost minus loss. Okay, so the right answer is B, C. Okay, moving to the next question. In a system whereby all activities are revalued each time a budget is formulated and start with the assumption that requirement of fund does not exist is called. When every activity, when we are revalue each and every time, this type of budget is always regarded as zero based budget. When we always revalue all and each thing for the formulation, then this type of budget is regarded as zero base budget. Okay, moving to the next question. Wait for a second. Okay, moving to the next. The management's time is saved by reporting only the deviation from the predetermined standard is called. When management want to save their time, then it is a topic of management. In this, like there is a different type of objectives, like management by objectives. Management by objective means set the objectives prior to do anything for setting these standards. Budgetary control to control the unnecessary expenditure. Standard costing for checking the variances. Management by exceptions means in exceptional situation, what thing we can do. So management is time save reporting from the deviation. It is a part of management by exception. Moving to the next. Marginal costing is also known as, no discussion about it, marginal costing is also known as the variable costing. Variable cost equals to, variable costing is equals to direct cost plus direct material plus direct labor plus variable overheads. Okay. Another name for contribution is margin income. How it is calculated? When we are selling any type of product, then from this we have to deduct fixed variable cost. It is regarded as contribution. Means after selling the goods, how much margin we are getting. Suppose a product is 100 rupee selling price and it is produced at 70 rupee. So 30 rupees are margin. From this 30, we have to deduct all the type of fixed costs. We have to deduct all the type of fixed costs. So this 30 rupee is regarded as contribution. It is also known as the margin. Management accounting. Accumulate, summarize and analyzes the available data, right? It primarily concerned with the requirement of the management, right? Makes corporate planning and strategic effective. Yes, it is also concerned with the requirement of the management, right? So the right answer, all of the above. What is prime cost? It means all the type of direct cost, direct material, direct labor plus direct expenses. The difference between the hours paid and the hours worked is known as, like, a labor is coming for 100 hours but is work only 90 hours. So the difference between these 10 different between these two 10 hours is known as the ideal time variance, which is waste due to the strike, due to the lockout, due to the power cut. Okay. The difference in the total cost that result from two alternative course of action is called, it is regarded as differential cost. Okay. A budget that gives a summary of all functional budget. A budget that gives a summary of all the functional budget and P&L account, projected profit and loss. Only one budget in which profit and loss is prepared, it is regarded as master budget. It is regarded as master budget. When there is no opening and closing stock, profit under marginal costing will be, if there is no opening stock, no closing stock, then profit always must be, remember, marginal cost profit always equals to absorption costing profit. So the right answer is C. Next question. Break even point can be reduced by. You want to reduce your break even point. What do you mean by BEP? Break even point. No loss, no profit. You want to reduce it. How? Either increase your sale price. If sale price increases, your profit increases. Reduces the variable cost, right? If your cost is decreases, then your profit always increases. Reducing fixed cost, yes, it is another right option. So the right answer is all of the above. Next and last question from the costing is, one of the following is not within the scope of management accounting: formulation of policy, planning and coordination the activity, decision making of alternative course of action, but classification and collection of cost is the main objective of cost accounting, not the management accounting. So students, here we completed all the type of MCQ which are based on costing. In previous lecture, we have completed lots of questions, and the remaining part we have completed right now. Okay, now if you have any queries, you can ask in this live section. So in the comment box, you write your queries. You can ask what type of queries you have. Okay, so do you have any query? Type it. I'm here to solve your queries. Give the fast. Tell me fast. Any queries you have? Students, I'm waiting for your queries. Do you have any query you can ask fastly? Okay, students, we are back again. So from the last lots queries are there of the two questions which are from the videos. I'm getting that. Just look at. There's a question which is related to the shares. Like there's a question: X Limited, X Limited forfeited 100 shares. X Limited forfeited 100 shares at the rate of 10 each due to the non-payment of final call 2 of the final call of 2 rupee. Okay, and these were reissued at the rate of 9. These are reissued at the rate of 9. Now the question is there: how much money in the forfeiture account and how much money transfer in the capital reserve? Just look. Any amount which is non-paid, which is not paid, call rupees, non-payment of call, it goes in the call in area. It goes in call in area. So from that 10 rupee, 2 rupees not paid by the shareholder. So total 8 rupees not paid. 8 rupee, 2 rupees not paid. This 8 rupees is the benefit for the company which is transferred to the share forfeiture. Okay, now these shares were reissued again at 9. So there is a loss. So there is a loss of 1 rupee. Earlier there is a profit of 8. Now there is a loss of 1 rupee. So overall profit 8 minus 1, that is 7 rupee. So in the forfeiture, 8 multiplied by 100, 800 will be there in forfeiture, and the profit must be transferred in the capital reserve. So 7 multiplied by 100, 700 must be transferred in the capital reserve. Okay, next question is there. Z Limited, that is the one. Now second question is, Z Limited forfeited 150 shares which are issued at premium of 2. Shares 150 issued at the rate of 10 each. Premium. How much premium is there? 2 rupees premium is there. For the non-payment of final call 3. Area. Call in area is 3 rupees. Okay. Out of these, 100 share were reissued. Reissued 100 shares at the rate of 11 each. Now, what the amount transfer in the capital reserve? How much money transfer in the capital reserve? Just look at and listen very, very carefully. Total money, total value 10. In this, we don't have to include premium because premium always included when the premium always included when non-payment of premium, but the premium is received, so no need to add in premium. Here deduct less call in area 3 rupee. So in the forfeiture there is a 7 rupee. Now only 100 share were reissued at the rate of 11. 10 rupee thing issued as 11, so there is no loss. So the 7 rupee whole is a transfer in the capital reserve on how much shares? On 100 shares. So for capital reserve, 100 shares reissued and the total profit of 7 rupee. So 700 rupee transfer in the capital reserve account. These two queries which is asked by the students. Next question. Next query is there. Question number 3. What is the abnormal gain? Any type of abnormal gain. Just look at. There is a two processes, process A and process B. In process A, units are transferred 1000 units and there is a normal loss of 10%. Okay, when the goods transfer from A to B, these are 950. How it is possible? Just look at 1000 units are there, 10% normal loss means 100 rupee, 100 units. So goods must be transferred 900, but here it is transferred 950. So from 900 we will deduct 950. So these 50 rupees is regarded as abnormal gain. Okay. One another thing, if these transfer only 880, so from the 900 we will deduct 880. So 20 rupees abnormal loss. Moving to the next question. Okay, now a general query from a student that what things included, what things to be included in the notes of balance sheet. How many things we have to include in the notes of a balance sheet? First of all the type of commitments which is for future purpose, which we have to pay in future. These are the commitments. Okay, just a second. If we talk about commitments, if we talk about commitments, any type of commitment which is related, any type of commitment which is related to short term or long term contractual commitments for future purchase, capital or revenue expenses, lease commitments, okay, guarantee given to the others, these all are not shown in the balance sheet. After the preparation of balance sheet, we have to discuss at the end of the balance sheet, at the end we have to show it. For example, any type of cash case is pending, any type of case is pending in the court, but amount is need to pay or not, it totally depend upon the, it totally depend upon the proving in the court. If it is proved we have to pay, so it is a contingency, we have to pay in future, we have to pay in future. So it is not shown in the balance sheet, these all directly shown in the notes of the balance sheet. Okay, moving to the next query. Query number 5, just a second, we are looking for it. What is the query? Extraordinary items, extraordinary items which are need to show in the balance sheet. How, what are these some type of extraordinary items which we have to show in the profit and loss account? Any item, any item which is not related with the ordinary course of business, any item which is not related to ordinary course of business, items which are not related to the ordinary course of business is regarded as extraordinary items in the P&L. For example, any loss from earthquake, theft, or we can say any type of loss or profit from sale of assets, long term assets. Okay, this is the another query which is completed. Okay, now one more question. What is contingent liability? Any liability which, any liability which depend upon the happening or not happening, any type of which happening or not happening of certain type of event is regarded as contingent liability, which is not shown in the balance sheet. What are the guarantee? A take the loan from the B, A take the loan from B, and B give the guarantee that if A is not able to pay, then I will pay it. It is not your liability. It is not your liability. It arose after happening of particular event. If B leaving the things, then it arises. So it is a contingent liability and also regarded as the guarantee. Next query. So what is BEP? Break even point. Break even point. For your exam, it is very important. It is a part of marginal costing. First of all, it is a part of marginal costing. In a marginal costing, what do you mean by BEP? BEP means where no profit or no loss. Like when there's a actual sales take place, then actual sales is divided into two parts. Actual sale is divided into two parts. One is BEP sales and other is margin. At BEP sales, contribution always equals to fixed cost. In BEP, fixed contribution always equals to fixed cost and profit always zero. Here, no fixed cost because all the fixed costs must be recovered by the BEP sales. So there is no fixed cost. Here, contribution always equals to profit, or we can say that profit is always greater than the zero. Okay, it is all about BEP. How the BEP is calculated? It is calculated in sales, in terms of sales, or in terms of units. If we talk about sales, BEP sales, then answer, if we talk about BEP sales, fixed cost divided by PV ratio, profit volume ratio. If we talk about in units, fixed cost divided by contribution per unit. If we talk about margin of safety, then profit divided by PV ratio, or in units, profit divided by contribution per unit. By this, we have to calculate. Okay, moving to the next question. One another important question that is will be asked in your exam from the material costing. What about material costing? What do you mean by EOQ, economic order quantity? How the economic order quantity is calculated, or they will ask at which level company get to EOQ. When order quantity is equal to the carrying cost. At this point, company get company give the order for purchase the things. Okay, how it is calculated? EOQ is the level where order cost. Sorry. Just a second. Where order cost is equals to the carrying cost. EOQ. EOQ always calculated to UO upon C, or another formula 2AB upon C root. Now what do you mean by A? A means annual requirement. B means buying cost, means ordering cost. C means carrying cost. Carrying cost is always calculated half of EOQ multiply by carrying cost per unit. These are the basic of EOQ. Now another question do you have, you can ask. Yes, students, do you have any query? You can ask it now. If we talk about some basic and some most important topics, just note it. It is very, very beneficial for your exams. Proper read BEP. Price variances. Share forfeiture. In the standard costing price variances, you just have to learn about the material costing and labor costing. No need to do any type of variable overhead and all, because from the past trends, they are not asking any type of fixed overhead and variable overhead. So just practice all the material and labor. Share for feature in the shares department, account normal accounting. Thereafter, contribution. With contribution, you have to discuss about EOQ. Fifth, in this you have to contribution EOQ. Next, we can say that condition of debentures, condition of redemption of debentures. Thereafter, types of debentures. Again, come at the costing part. Then in costing, operating costing. These are the some basic elements which you have to study before your exam. So these are some important contents which you have to follow. Okay. Now, do you have any other query you can ask? Okay. Any other query you can ask? All the important topics are there. You also have to think about theory, because theory is also equal importance. Okay, one another query is also there. One more query is there, that how the debentures, issued. Actually, debenture may be issued in three ways: at par, at premium, or at discount. Shares can't be issued at par. Share can't be issued at discount. Only sweat equity shares issued at discount. Only sweat equity shares issued at a discount. Okay. What do you mean by par? What do you mean by premium? What do you mean by discount? If we talk about par, if the value of share debenture 100, if 100 and it is issued in the market exactly rupee 100, then it is regarded as par. When the value of debenture 100 and issued at 110, it is regarded as premium. So this 10 rupee is a capital profit, is a capital profit which must be shown in a separate account which is known as security premium reserve account. Okay, now for discount, if the value of share 100 but it is issued at 90, so 10 rupee is the capital loss. 10 rupees the capital loss. For this purpose, we have to open an account which is known as discount on issue. This discount is a capital loss, so it need to be write off. It need to be write off within a 3 to 5 years. Either from the normal profit and loss or from the SPR. We have to write off within a 3 to 5 years. Okay, any other query? Any other query you have, all students? One more from the redemption of debenture, that if the debenture redeem at a premium, then this profit transfer to the capital reserve. When any type of DRR account is opened, debenture redemption reserve account, then the amount must be transferred to the general reserve. Okay, these are the basic things. And debenture redemption investment amount, 15% of debenture, 15% of debentures redeem current year. Okay, next, how much money transfer in DRR? 25% of debentures value. Any other query in the accounts and costing? Okay, not such a query. So for today, we are closing it. Thank you all.